Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining me. Also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago. He is the president and CEO of InTheMoneyStocks.com. And we're going to talk to Nick. He's like the Babe Ruth of trading here on the show. He has really hit it out of the park several times. And I think we've got Nick on the line right now, right? Nick?
Hey, Michael. How are you?
I'm good. Hey, season's greetings. Glad you showed up.
Happy holidays.
Thank you. You too. All right, Nick, what are you looking at? What are you trading?
Well, right now, to be honest, I'm on vacation this week, but I am watching the markets closely, watching the S&P, see if there is any type of bullish pattern could form going into the month of January. It's always a tough month because you do have people looking to exit positions after the new year, also have people looking to, institutions, I should say, looking to cause the January effect, which means if the market's usually up the first week of the month of January in the new year, it usually finishes positive by the end of the year. So it's a tricky month, and I'm just really observing the markets for pattern right now.
Okay. Can you give us any kind of an insight of what you think may happen as we go through 2012 with the economy?
Well, I think we're going to go down significantly. I think those October lows from 2011, October 4th, 2011, will be tested at some point. I think the market right now is making a real loose, choppy consolidation pattern to maybe continue this last leg up. But once this leg is complete, the downside should begin. Okay.
Now, when you say complete, is there a date or a price, or is there more of a pattern that you're really watching?
It's actually all three.
Okay.
I'm always observing time because I think everything is set to a clock, and when time's up, time is up. Right now, the markets are holding up fine. There doesn't seem to be really any problem. Yesterday, you had a little sell-off on extremely light volume. I think we'll get light volume probably throughout the first week of January, but and we'll just have to see where this market can go. I've told my subscribers I think we have a legitimate shot of just getting above those the October top. I do think we get through there. We have a real good chance of it, and maybe we'll test the 130, possibly as high as 132. But after that, markets will start to face major headwinds again in 2012.
Okay. Nevada wants to know, he's on the shout box, wants to know when you think the Christmas rally will end.
Well, I think, like I said, January is a little bit of a tough month, so I have to really look at if there's any month of the year that I've had problems with, it's been the month of January. Even last January, I had a little tough time picking the high there, and I've probably been known to pick tops and bottoms, more than I like to do it. But January always gives me a little bit of a tough time. But once I have that January pivot, I'm usually good for the rest of the year. We'll see exactly where that goes, Mike. I couldn't really pinpoint it exactly just yet.
I got it. No, nobody can. But here's some stuff that came to my desk on a thought. Deflationary pullback really hard in the beginning of the year. I've got cycle dates coming up between the 6th and the 9th that I want to see how this market reacts coming out of it. But then we have another major cycle date coming up in the middle of March, actually March 13th to be exact. I wanted to see how my cycle dates are coinciding with what your cycle dates are saying.
Well, March is always a very, very pivotal month. So, I always look for turns somewhere, around March 10th. It's always been cyclically a pivotal month regardless. Anybody that knows just, the slightest thing about cycles knows that the month of March is always pivotal. Even in 2009, we had that stock market bottom at 666 on the S&P 500. So March is always a very pivotal month. As for the beginning of January, for me, I'm a little bit uncertain at the moment. But if you go back 3 years and you go back to 2008, which would actually be 2009, you go back to the 2009 in January, we topped out on January 6th. So there always is that chance of a repeat of that happening again. So we'll watch. I think that could be a short-term pivotal date. And, it would not shock me to see the markets put in a short-term high, but I'm not 100% sure that that's going to happen at the moment.
Okay, yeah, we've got to see it play out. Give me your insights on the energy sector. Let's start with the crude oil market. Do you think we're going to be seeing anything exciting coming up shortly on the upside with this crude oil? I know we got this issue going on in the Middle East, with the Straits of Hormuz, but I'm just wondering what you're thinking about this.
Yeah, I mean, we always have the issues going on in the Middle East, and now with the Strait of Hormuz and the Iran situation developing. I honestly think that oil's holding up very, very well at the moment. I think we're going to get probably one more move, but it's just at this price with crude, $100 a barrel is unsustainable for the economy, and I ultimately think crude's going to roll over with everything else, some point early in 2012. Okay,
and with it, we're going to see further downside with the gold market too?
Yes, I've been firm on that. With gold, even gold is lower today, again, by another nearly $20 lower. Ultimately, I do think that we're probably headed down a little bit further in gold. Gold may have put in a short-term low today. I'm just looking at the GLD now, and it's overstretched. So I wouldn't be surprised to see the GLD catch a little bit of an oversold bounce in here now, and that would bode well with the market inflating a little bit over the next couple of weeks. However, ultimately, I do think gold is headed lower in 2012, and all it's doing is signaling deflation in the marketplace.
Okay, now there's a couple of stocks that you look at that give you a preemptive indicator on where in different industry sectors are going to be moving. One of which you brought to my attention was J.P. Morgan. And I wanted to see if there's anything going on with some of your TEL stocks, if you will, that gives you an insight of industry sectors, how you think they're going to perform in 2012.
Well, you have to. I mean, we're dealing with a banking crisis again. Whether it's here in the United States or here in Europe, I think every bank is in a crisis scenario. Right now, JPM is holding up fine, and that is one of the stocks that I use as a barometer for the market. I think JPM has upside to around the $35 level, maybe 34 and change. I've actually said that to my subscribers to watch for JPM to at least test that area, where that's going to be the real test to see if it can get through there. I'm not sold at all that it can get through $35 at the moment. So when these financials roll over, obviously it's going to be a time where the major indexes will roll over as well. But I continue to watch JPM. I continue to watch ExxonMobil, which is holding up extremely well at the moment. That's a good market barometer stock to follow. Right now, I don't see any problems with ExxonMobil at the moment. I think the stock is very, very strong, and that's telling us in the short term that we could see higher prices. And then if you take a look at the energy sector as a whole and watch oil, it's always important. But just a little bit more upside across the board, and that really is it.
Okay, but I'm getting the feeling on the banking sector you're bearish.
Yeah, well, I mean, we have a little bit more upside baked into this cake, and then that's about it. And then I think the financials will lead us lower again.
Okay, a lot lower, or is this just...
A lot lower.
Oh, okay. All right, and is there any fundamentals beyond that? In other words, what's happening in Europe is going to come here and happen again in the U.S.?
Well, I just think that, not that I'm a fundamental trader at all, I'm purely technical, but... Right. All these banks are intertwined. They all own each other's debt. They all own, the sovereign debt of different nations, whether it be Europe, whether it be Asia. Everybody has a big piece of the pie. They all have skin in the game. So the truth of the matter is, if the European banks start to falter, the U.S. banks falter as well.
All right, and that leads me to believe that no matter what, we're going to be seeing more money come into the system in an ongoing effort to do what they've done already to try and keep the rates down and put more money into the system and inflate our way out of this issue.
Oh, ultimately, that's the only way out, is just to inflate our way out of it. You'll probably see at some point Europe start to print money. The Federal Reserve will probably do another quantitative easing at some point, although they may not call it QE3. But it'll get another fancy name. Transformational vocabulary goes a long way these days. So they'll do something along those lines.
Okay.
And even China will probably will begin to try to inflate their way out of their problem, because they're in a bear market essentially right now.
Yeah, we haven't talked about China, and that's one of the things you like to talk about. Do you think that we're going to have a big issue with China as we go forward?
Absolutely. China is more important, in my opinion, than all of the European crisis. And the reason is that China has been the growth engine of the world. China right now, their market is very, very fragile. The Shanghai index, which I think is the most important index that any trader can follow, has really struggled, and that's going to play out in 2012. So once all these central banks come on board and get together again, they'll essentially do what they did back in late 2008 and early 2009, and just inflate the markets one more time.
I've got another. Mark Lytle brought up a statement here. I want to bring this out. Maybe you can comment on it. He doesn't think that inflation has any effectiveness against trillions in derivatives. So evidently, Mark thinks we're going to have a derivative failure. Do you want to comment on that?
Well, I think that the derivative problem is just so extreme and it's so large. I don't know if there's a way to really fix it, except there's only one solution to all problems. That's a bankruptcy and default, which isn't allowed to occur anymore. So that's an issue. But as a trader's perspective, Michael, to be honest, I just want to be on the right side of the trade. I don't care if we go to Dow 50,000 or we go to Dow 500. As long as I could capture that move, I'm the happiest guy on the planet.
I got it. Yeah, I was in a conversation the other day with Gary, a guest on our show, and we were talking about the possibility of debt forgiveness in the way of mortgages here in the United States. And I know that's a conversation long-winded for us in another time, but I'm wondering if that's actually going to be something that really does happen.
Well, if we ever go back to the gold standard, which I think is a very, very fair possibility, I put it at over better than 50% odds that we will at some point, there will have to ultimately be debt forgiveness.
And I'm going to be really careful about how we frame the question on what way that one's going to end up being. But that's for another story. We're out of time, Nick. How do we get in touch with you so people can
come on over to InTheMoneyStocks.com. We offer a 7-day free trial. Try out our chat room. You can get to hear us and see our trades each and every day. And you come over to our research center. You'll get our nightly setups. You'll get our videos. You'll get our market outlook, our cycles, and a whole lot more. So come over, give it a try, and usually once you come in, you don't leave.
And I'll be toasting to you on New Year's Eve, buddy.
Thank you, Michael. Have a great holiday.
You too. Tell everybody I said hi.
Thank you.
You're welcome, everybody. That was Nick Santiago, President and CEO of In the Money Stocks.